Hey, what's up guys? Sam here, and I'll be doing the free video for Friday, December 16th, 2022. So we just finished making the premium video for the good folks in the gold room, and we looked around a couple of things. We start with the index. We try to get some level of a bias based on the index first, and then whatever the bias is, whether it's long or short, based on the index, then we look at other products like HYG, the dollar, the volatility products like VIX and VVIX, and we just try to either see if we can kind of play devil's advocate against it and disprove what we saw in the index, or whether it just confirms. And this time it was just confirming. So I'd like to show you here the SPY, because we actually have a very dangerous setup that has developed here, and it's certainly worth your time to know about it. So I'd like to draw your attention here on the far left hand side to the weekly chart of SPY, and I'm going to trace in the weekly 50, which is the blue line. So you can see the last time we had a rally, it rallied right into the weekly 50, and that ended up being the top, right? Now you can see that the weekly 50 is kind of the last line in the sand. It's the last moving average that would keep price contained. So last time that we rallied to it, you got a high-low sell signal. The trend oscillator, which is right here, was bearish the whole time. So when you have a bearish trend oscillator and then you get thrust, that really can drive price down, right? So what was the pattern? Well, the pattern is you touch the blue line, you trigger a sell signal, and that drives you significantly lower. Let's look at what happened this week. We came up, we tested the blue line, same as before, and now we have a mid-level sell signal, same as before. So we would have to believe that the pattern will stay true and that we will see a push lower based on this pattern. I would be looking for a minimum of 365 here, which very cleanly to the penny is your weekly 200. The problem is that you're about $20 away, right? And there really isn't much support between this $20 gap to support. Also, this signal here implies that when, well, I was going to say if, but I'll say when we retest 365, it is going to be very unlikely to hold. So, and then if we take it over here and we ask ourselves, well, what do we see on the 3-day charts and the 2-day charts? Just trying to see if we can disprove what we just saw on the weekly chart, which is a very clean pattern that's repetitive. Well, you have a bearish situation here, right? Red is on top of green. Both are now trying to get below the middle. Same thing here. And you now have a sell signal that has printed across these time frames. So that is a little bit of a problem. And then lastly, and this is just kind of very in the weeds, but it does matter. You see how the green line here was coming up to try to cross the blue. This is on a 2-day chart, and you see how it didn't actually ever cross it. And now the blue and the green are almost on top of each other here. The green will then start to create separation away from the blue, and that will imply speed, right? So basically everything here implies velocity incoming, right? So this is actually a setup that could actually see us have a very, very nasty day sometime soon, because this is kind of the setup that requires what I would call a cathartic puke, right? You can see here the indicators are very, very unstable to the downside, and this is very unlikely to resolve slowly. So when everything like this works together, it does give us one point of view on the market, and that is that the market is pretty darn bearish here. Going into next week, the only way to fix this is going to be with a huge short squeeze. So I do want to give it the other side of the coin here, because everything looks like it would be a short on every kickback to any moving average. The only way to fix this is with a giant short squeeze that would allow you to retake 395 on the SPY, which would be above the 21 daily, but I don't see a catalyst to support that idea. If I then show you something like XLY, just to tie things together, because it is important to understand that these are not just ordinary sell signals. These could be dramatic sell signals, because there is nothing under price in terms of support. If you look here at XLY, and keep in mind XLY is, Amazon and Tesla, you have that support level, right? That I just drew in. That support level is your pre-COVID highs. So you come down, you bounce off the pre-COVID highs, you come back down again, and you're unable to really get any lift, right, off of this level. So why is that level so important? Well, you'll note that there is no support from here to here, right? You might have support through here, right? But that is still a giant chasm under price. And if you look at it, this thing never even sniffed a buy signal. So this is the problem with most things in the market right now, is that they have these huge chasms underneath, whether it's Amazon or even Tesla. Apple has a giant one. Tech in general has a giant chasm under price. So this type of stuff I don't imagine will be kind of a very slow kind of thing like this down. Usually this kind of happens very, very quickly when it finally triggers. So you're also going to have a lot of folks with stops all through here. So if you can punch this level, you'll trigger the stops, which will trigger that cascade dynamic. So all of this, I think, is pretty important to know. If I show you now the most important stock in the world, just to tie it all together, which is Apple. Apple here is giving some of the naughtiest signals it has ever given. And you can see here on the 3-day chart, which I think is a good time frame to reference sometimes, that's a 3-day chart, you have a squeeze, moving averages that are pointing lower, a trend oscillator that's pointing lower, and about 100 separate sell signals. So again, it's not so much the problem that it's like, oh, it's a sell, it's that it's a very coiled sell with really nothing under price. If you look at Apple here, you have a pretty big gap there back to about 115, which is your support level. So that would be about a $20 move in Apple. That's a substantial move, right? That's almost a 15% move. So very difficult to argue with these signals here in Apple because everything is aligned, and then we're seeing alignment also in the SPY. So be careful out there. Going into the end of the year, let's not take Santa Claus rallies for granted. We have to trade the charts that are in front of us, and the charts that are in front of us as of right now after Powell, which I thought was quite bearish. At least if you listen to what he said, it sounded quite bearish to me. And it seemed like he was uncomfortable, which is also bearish because I don't think he wants markets to go lower, but that's just what he has to do. It is screaming to be cautious out there. So for this type of environment, I do like put calendars because they put implied volatility on your side if that were to spike higher. And I also like out of the money put debit spreads. I even like out of the money puts here with time in any of these tech stocks, really. So I would prefer to do that on a bounce. We'll see if we can get one next week. But I would also not be too surprised if next week opens up and Apple is trading 130 or less by next Friday when I see you next time. So be very careful out there, guys. There is as many sell signals active right now in everything that matters as I have seen. And it's not just the fact that there are sell signals, but there's a large air pocket. Look at me being diplomatic. I was going to call it something else. There's a large air pocket under the market that can be very quickly filled. And that will be a feast for the bears if that happens. So be smart out there with your longs. And on any kickbacks, the market would be a short. So we'll come back next week and see how it all shaked out. But for now, tech put calendars, out of the money puts, and out of the money put debit spreads all make sense to me. All right, guys, that is my time. Thanks as always for clicking on our video. If we helped you at all with this video, do leave us a like, a dislike, or a comment, or all three, or all two. I guess you can't leave us both a like and a dislike. So leave us a like, leave us a comment. It does help us with the algorithm. Let us know if you see it differently, right? Especially if you see it differently. I would love to hear from you. Especially if you see it, somehow see it differently. I could be flat wrong. Maybe my indicators are completely wrong, and I'm missing something. So if you think that the market does something different, do let us know, and we'll see if we can come to a conclusion together in the comments below. All right, guys, that's my time. Thanks as always. Have a great day. See you next time. Cheers. Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money, and be part of the community, come and check us out at simplertrading.com.